Stocks perk up, shrugging off tariff fears, with mid-caps leading the charge after the recent slide. Metals and healthcare are the big gainers, even as IT drags. RBI lifts curbs on Kotak Mahindra Bank, onboarding new online and credit customers, drawing positive sentiment and reactions from the analysts. Jay Kotak, co-head of Kotak 811, tells CNBC TV 18 that the development is a big positive and comes on the back of significant efforts made by the team. ICICI Bank says Prudential's JV partner in the mutual fund arm ICICI Prudential AMC is looking to sell some stake via an IPO. The bank, however, will not participate in the offer and shall retain its 51% stake. JSW Group's Parth Jindal tells CNBC TV 18 that the steel tariffs imposed by US will benefit JSW USA. He also welcomes the entry of EV players like Tesla to India to grow the market. And small companies appear to have outdone the Goliaths, while many listed FMCG giants posted 0 to 5% sales volume growth in Q3. Market research company Nielsen tells CNBC TV 18 that the small and mid-sized companies saw 8 to 10% volume growth, while Amul MD Jayant Mehta says Amul sales grew by 15% in the third quarter. Hello, good afternoon and welcome to Business Lunch live from CNBC TV 18 Motilal Oswal Studios. I'm Vinny Motiwala and thank you so much for tuning in to CNBC TV 18. Looking at the Nifty, 23,180 is what the Nifty is holding on to. It was trading about the 23,200 levels at one point of time. But yes, now it's come down to 23,193 right now is what it's trading at. Still near that 200 mark, so not much of a worry. Managing to hold on to green in today's trading session, 0.6% is what we are seeing in terms of a gain coming in for the Nifty 50. Top contributors, Bajaj Finance, Reliance Industries, Sun Pharma, Kotak Mahindra Bank among the top contributors, and top support that is coming in and pulls that is coming in from the market is from these stocks. Let's look at the mid and small cap. We're seeing that outperformance coming in from Nifty mid as well as the small cap. Nifty mid cap is holding on to gains of almost 1%. Small cap is managing to hold on to gains of 8/10 to 9/10% as well. Okay, now it's holding on to gains of 6/10%. Beg your pardon. So it's 6/10% of gains that we're seeing coming in for the Nifty small cap. Pharma and metals, that's the top sectoral gainers that we're seeing coming in. Nifty Pharma is holding on to gains of more than 1.5% to 2% gains as of now is what we're seeing for Nifty Pharma. Metals also holding on to gains of around 1.7% in today's trading session. So an interesting day coming in, especially for both these sectors. What's not doing well today is Nifty IT, a bit of a subduedness there, as well as PSU banks is something that is seeing a bit of a drag. But that's what we're seeing in terms of a market setup coming in as of now. As of now, Nifty managing to hold on to 23,190. Above that mark and near the 200 levels, 23,200. So keep an eye out on that. But moving on and starting the show where we have more updates coming in from the US. Prime Minister Narendra Modi has landed in Washington for his two-day visit to the United States. CNBC TV 18 has also confirmed that Tesla CEO as well as the head of Doge, Elon Musk, is also set to meet the Prime Minister during his visit. Parikshit is joining in with us from Washington, D.C. to tell us what is on the Prime Minister's agenda.
Prime Minister Modi has arrived in Washington, D.C. He will be meeting Donald Trump at the White House, and there will be a difficult conversation on trade. While Donald Trump wants India to reduce the trade deficit, buy more from America, India is likely to send out a clear message. We want to help you with concessions. We want to help you reduce the trade deficit, but this cannot be a one-way street. It cannot be all about making America great again, buying more American products. It has to be a win-win partnership for the US as well. The US has also sent out a message just at a time when the Prime Minister was landing in Washington, D.C. The White House press secretary went on to say that the US will be imposing reciprocal tariffs in the next 24 hours. She did not specify which country, but India definitely could be among the list of countries which could be the target of those reciprocal tariffs. India is devising its strategy. We are going to offer concessions in 10 to 12 areas. If India is targeted with tariffs, that could come up in the conversation as well. But clearly, we are going to see a significant statement on having a trade partnership, perhaps a limited trade deal in the joint statement. And both sides would like to conclude some sort of trade agreement by the time Donald Trump visits India later in 2025. Tulsi Gabbard, the Director of National Intelligence, has already called on Prime Minister Narendra Modi. Tomorrow, Elon Musk, the head of Dodge, the CEO of Tesla, is going to call on the PM. Vivek Ramaswamy will call on Narendra Modi, and so will Mike Waltz, the US National Security Advisor. So, a lot of important meetings tomorrow, and keep watching CNBC TV 18 for more.
Also, Parikshit caught up with Mukesh Aghi, who of the US-India Strategic Partnership Forum, and asked him about the bilateral relations under Trump and whether India will see reciprocal tariffs from the administration. Listen in.
India has maintained strategic autonomy in every aspect because it has to live with China on its border. But at the same time, China also has taken a position that it will never treat India as an equal partner. So India has to find its own position. Now, it does not mean that it's going to be 100% dependent on the United States. It will leverage that relationship. It's going to partner in a way that is win-win for both countries, but at the same time, do not sacrifice its autonomy vis-a-vis China itself. More important is, I think, the Trump team, from a geopolitical perspective, will try to leverage its partnership with India to put pressure on China. And it all depends how far India goes managing that also. The average tariff India has, even though after bringing it down, is down to 11%, whereas the average tariff of US is around 3%. So there is a gap. And I think there'll be a lot of pressure, especially on the goods which are being exported from the US into India to be brought down. I don't think there'll be pressure on the agriculture side because US protects its agriculture, so does India protects its agriculture. So it will be goods, especially I call the capital goods which are coming from the US into India. I think but the bigger picture would be I call market access and level playing field. It is important for US companies to explore India, to get access to the Indian market, but at the same time have a level playing field. And I think that's where the pressure points will come in.
Okay, and Parikshit caught up with the CEO of General Atomic Global Corporation and the President of US Energy Association on what they expect from the high-stakes meeting between the two leaders.
A lot of synergies in the defense relationship, not only from a defense trade standpoint, but also from the operational standpoint. A lot of military-to-military exercises, and then indeed a lot of collaboration and initiatives in terms of critical and emerging technology. I think the defense trade has grown tremendously as I've observed it over the years. And as you know, it stands over $22–23 billion at the moment, and I think that is only poised to grow. And that is simply from a fact that when you have the largest democracy and the oldest democracy working hand in hand with common objectives against adversaries around the world, there is a meaningful collaboration in terms of platforms and certainly supply chains.
Countries like India, before, who you had to pay a premium for Mideast oil or Mideast natural gas, or deal with other countries that you really had no choice as to who you were going to deal with, right? Well, now the U.S. is available as a partner, right? And I think that generally to have optionality, it's good for U.S., good for U.S. economy, good for business, good for long-term relationships. Right. But it's also good for pricing for the Indian consumers. The natural gas global market has really evolved at the level almost like the oil market, where prices in the U.S., prices in India are set by the global price of where these commodities are traded. And now we're seeing that with natural gas. Right. So the consumers in India can benefit with more suppliers, more optionality. It's going to decrease prices, and it'll benefit our partnership.
Okay, on that note, we're going to slip into a very short break. We get you some key takeaways from the Karnataka Investment Summit on the other side. Stay tuned in. Welcome back to Business Lunch on CNBC TV 18. Now let's move on. Market regulator SEBI has floated a consultation paper on investment advisors charging advance fees up to 1 year. Yash is here to tell us more details on this front. Yash?
Well, it's an interesting consultation paper if you are a research analyst or an investment advisor. Essentially, what market regulator SEBI wants to seek views through this consultation paper is on the fact that these research analysts and investment advisors should be allowed to collect advance fees from their clients for a period of up to 1 year or 4 quarters. Currently, research analysts are allowed to collect advance fees from their clients for just about 2 quarters. Investment advisors, on the other hand, are allowed to collect advance fees from their clients for just about 1 quarter. Now, the consultation paper from SEBI is after the research analyst community had made a representation to market regulator saying that it is getting very difficult for them to provide long-term investment advice to their clients in absence of long-term fees, and hence taking that under consideration, market regulator SEBI has floated this particular consultation paper. The last date when it comes to submission of views as far as this consultation paper is concerned is February 27th.
Okay, Yash, thank you so much for that. And moving on from the sidelines of the Karnataka Global Investor Meet, my colleague Ritu spoke to Parth Jindal, Managing Director of JSW Cement and JSW Paints, and Santosh Iyer of Mercedes-Benz India about Tesla's potential entry into the country. Listen in to what they had to say.
I think India is waiting for Tesla to come in. I'm waiting for Tesla to come in as well. We need EV penetration in this country to increase. Last year, India was only at 2%. 100,000 EVs got sold in the passenger vehicle segment. We want to see these numbers go up, and more EV companies coming into our country will be welcome.
I think in general, any new player coming in, including Tesla, is more than welcome because it will help consumers shift to EVs better and more the merrier, I would say, in the EV segment. When you talk about Tesla, we are not sure whether they will come in our price segment because we are in the luxury segment and that's only 1% of the market. So maybe if they look at volumes, they need to participate in the mass market segment. So they need to see what impact it has. But in general, as I said earlier, we welcome any new player in the market. It only helps us expand the segment.
And as we wrap up the Growth Code, an initiative by Grow and CNBC TV 18, Prashant Nair from CNBC TV 18 sat down with SEBI's whole-time member, Mr. Anant Narayan, to discuss why traders and investors must strike the right balance between risk and returns.
In a phase like this, everyone chases returns, right? I mean, that's the number one agenda, absolute returns, how much can you make, etc. But there is also risk involved in the journey of making those returns, which we don't really talk about at all, I mean, very, very little. Your perspective on it and how important is it to look at risk-adjusted returns in that sense?
You're right. We tend to focus on returns, which is a measurement of where you started from and where you ended at. So the A to B of just defining those 2 points. The risk element is really how was your journey as you move from A to B? How bumpy was it? How smooth was it? And the reality is it's an independent variable that impacts us. Return is one element, but how your journey was is also crucially important for all of us. Now, you often hear people giving advice that don't worry about the ups and downs. Look at the end points and see you get this annualized 10%, 15% returns from different asset classes. But the practical reality is all of us have a certain risk tolerance. And when you see volatility, when you see big jumps up and down, you do go through an emotional roller coaster.
Absolutely.
And you should have the ability to absorb that. So I think it's crucially important that we start to, as investors, as long-term investors, we start to internalize the concept of risk. We start to measure what is our risk appetite, and it's a very individual number. I cannot answer for you and you cannot answer for me as to what our respective risk appetite ought to be or should be. It is a unique experience based on where we come from. And once you know what your risk appetite is, you've got to create an investment portfolio that mirrors that risk.
Okay, on that note, we're going to slip into a very short break. Up next, Donald Trump and Russian President Vladimir Putin hold discussions over ending the war in Ukraine. Details after the short break. Welcome back to Business Lunch on CNBC TV 18. We have seen that the Nifty is off at that day's highest point, 23,200, above that mark. Now it's trading at 23,150 levels. So slight bit of a decline that we've seen coming in the last 30 minutes from those highest levels. Keep an eye out on that. Advance decline ratio as of now still is in the favor of advances versus decline. So 1,700 stocks on the advances side, while decline is somewhere around 886 stocks. Talking of the mid and small cap, they are also off the day's highest point. So Nifty mid cap is now up 0.9%. Small cap is up 0.4%. 3/10 to 4/10%. So keep an eye out on where the market is headed in the second half of the trading session. Nifty Bank, pull that up. Nifty Bank is just managing to hold on to gains. At one point of time, it was up 4/10 to 5/10%. So, that's going to be key focus area in the next half of the trading session, where we're seeing the markets move. Right now, we've seen the decline from the day's highest point. So important to watch out for that. Also, let's see the Nifty contributors. Okay, what's coming up on the chart right now? In terms of a drag, we have HDFC Bank, Infosys, TCS. That is the one that is seeing a bit of a drag, while Sun Pharma, Bajaj Finance and Kotak Mahindra managed to hold on to gains. Slight bit of a decline from the day's highest point is what we are seeing for the markets. But yes, that's where we will be ending this edition of Business Lunch at CNBC TV 18. Thank you so much for tuning in. Up next, your Midcap Radar.